Okay, let's just jump right in. It is Monday, January 26, 2026. And I have to say, if you were brave enough to look at your portfolio this morning, you probably reached for a stiff drink immediately after.
Or maybe just a blindfold. It is genuinely ugly out there.
Ugly is putting it mildly. We are talking about an absolute bloodbath. $100 billion wiped off the global crypto market in just 24 hours?
Yeah.
Bitcoin's down 3.4%. Ether is taking an even bigger hit, down over 5%. I mean, the charts are just a sea of red.
It's a classic liquidity collapse. But what's so fascinating here is the trigger. We aren't looking at a massive exchange hack.
Right.
We're not looking at a protocol rug pull or, some flaw in the code that drained a treasury. We're looking directly at Washington, D.C.
Yeah, the suits are causing the trouble this time. I was looking at the prediction markets this morning. Kalshi, Poly Market, they're going absolutely nuts.
I saw that.
They've spiked the probability of a U.S. government shutdown by this Friday, January 31st, to 80%. And just yesterday, that number was, what, sitting below 10%?
It's a massive shift in sentiment in a very, very short window. And that's exactly what our mission is for this deep dive. We aren't just going to stare at falling prices.
No, that's just panic scrolling. It doesn't help anyone.
Exactly. We need to understand what I call the mechanics of paralysis.
The mechanics of paralysis. I like that framing. Because when the government turns off the lights, it's not just that politicians go home for a long weekend.
No,
It actually breaks the plumbing of the whole industry.
that's it. We have a stack of sources today that paint a very concerning picture of what actually happens on Friday. We're looking at market data from A-Invest and FX Street to, diagnose the crash.
Okay.
But we're also digging into the actual operational plans, the shutdown playbooks from the SEC, tax analysis from Takedia, and legislative updates from Jesuit.com.
So we're going to see what happens to everything from ETF approvals to your tax audit when the federal government effectively becomes a ghost town.
That's the plan.
So let's start with that panic button. The market reaction has been immediate and violent, but walk me through the numbers. Why is the drop this severe? Is it just people selling because they're nervous, or is something structural going on?
It is structural, and it's driven by leverage. As you mentioned, Bitcoin dropped below key support levels. It was in this consolidation phase, sort of waiting for a direction.
And this news just kicked the legs out from under it.
Completely. But the real carnage, the real story, is in the derivatives market. We saw $360 million in leveraged positions liquidated in a single day.
Okay, for the listener who might just, buy and hold on Coinbase or a hardware wallet,
Yeah.
can you break that down? When we say $360 million liquidated, that's not just people deciding to sell, is it?
No, that's a crucial distinction. In the derivatives market, traders borrow money to bet on the price. That's leverage.
Okay.
So if you bet the price goes up a long position and the price drops instead, the exchange demands more collateral to cover that loan if you can't provide it instantly.
The exchange just sells your Bitcoin for you.
Automatically, to cover the loan. And that forced selling drives the price down further, which then triggers someone else's liquidation.
It's a cascade.
Exactly, a cascade. And specifically, according to the data, $324 million of that $360 million was long positions. People were betting on the price going up.
And the political news just forced this cascade of, robot-driven selling.
That's why the drop feels so violent. And Ether is hovering dangerously close to that $3,000 mark. If it breaks that support, the algorithms kick in again, and we could see significantly more downside.
And it's not just crypto, right? I mean, I know this is a political standoff, but why is crypto taking it on the chin so hard compared to, say, Apple or Microsoft?
Well, to understand that, we have to look at the political context, which we pulled from A-Invest. And we have to be really neutral here. We're just looking at the mechanics of the dispute.
Of course.
It's all centered on the Department of Homeland Security funding bill.
Right. This is the whole standoff over ICE and Border Patrol.
Correct. Senate Democrats, led by Chuck Schumer, have blocked the bill. They're demanding structural reforms to ICE, especially after that high-profile shooting in Minneapolis.
Okay. And on the other side?
On the other side, you have Republicans who are being accused of capitulating to President Trump's hardline immigration policies. So it's a classic stalemate.
Democrats won't fund DHS without reforms. Republicans won't pass the broader budget without the DHS funding. So everything's stuck.
Everything. Defense, Treasury, Health and Human Services. It's all held up. And if there is one thing capital markets hate more than bad news, it's uncertainty. We're seeing the crypto fear and greed index hit extreme fear for 6 days straight.
But here's the thing that always gets me, and I want to get your take on this. The narrative for years, I mean, literally the sales pitch for the industry has been that Bitcoin is digital gold.
Hmm.
It's supposed to be the hedge against government incompetence. So if the government shuts down, shouldn't Bitcoin be mooning? Shouldn't people be flocking to the non-government money?
And that is the great safe haven irony. In theory, yes, that is the marketing pitch.
Right.
But in practice, right now, absolutely not. Investors are fleeing to safety, but they're fleeing to actual gold. Gold is outperforming crypto significantly this week.
So when the chips are really down, institutional money still treats Bitcoin like a high-risk tech stock, not a gold bar.
Precisely. In this specific shutdown scenario, Bitcoin is behaving like a risk-on asset. In fact, its correlation with the S&P 500 has been negative recently, but not in a good way.
How's that?
Stocks are holding up, somewhat better, while crypto is taking the brunt of the fear. It's reacting to the liquidity crunch. When people get scared about the economy stalling, they sell the riskiest, most volatile thing they own first to get cash.
And right now, that's your altcoins.
That's your altcoins.
So we have prices tanking because investors are scared. Let's pivot to the mechanics you mentioned at the top, because price is just sentiment. I want to know what physically breaks on Friday at midnight if they don't reach a deal. Let's talk about the regulators.
This is where it gets really interesting and honestly a bit scary for the industry's progress. We looked at the SEC's operations plan under a lapse in appropriations. It's a document from 2019, but the protocols are largely the same.
Okay, so I imagine the SEC doesn't just lock the doors and leave a gone fishing sign.
Not entirely, but it's close. They operate with what they call a skeleton crew. We're talking about a massive reduction in staff. Historically, around 90% of the agency gets furloughed.
50%, wow.
And the document states explicitly that they suspend all non-emergency rulemaking. They stop answering interpretive questions.
Right.
But the big one for us, they stop the review of new financial products.
Okay, let's drill down on that. Review of new financial products.
Yeah.
So if I'm an asset manager and I've got a shiny new Solana ETF application sitting on, Gary Gensler's desk, what happens to it?
It gathers dust. The altcoin ETF floodgates, as CryptoSlate called them, are effectively slammed shut.
Just when we were getting some momentum.
Exactly. There was all this hope that after the Bitcoin and Ether ETFs, 2026 would be the year for Solana, maybe others. But here's the technical reason why they stall. It's not just that no one's reading them, it's a legal mechanism called acceleration.
Acceleration. Help me out here. What does that mean in this context?
So under the Securities Act of 1933, when a company files to launch an ETF, there are these statutory waiting periods mandated by law before that fund can go live. They can be pretty long.
Okay.
Usually, the SEC grants acceleration to skip those waiting periods so the fund can launch on a specific planned date.
Right.
The SEC explicitly states in their shutdown plan that they will not, and this is a quote, accelerate the effectiveness of registration statements.
Accelerate the effectiveness. That sounds like the most bureaucratic way of saying we are not stamping your papers.
That is exactly what it is. Without that acceleration order, these funds cannot launch, even if the application is perfect, even if every I is dotted and T is crossed.
So if you were hoping for an approval in early February, you can just forget it.
Forget about it. Those files will sit there until funding is restored.
But wait, what about the EDGR system? That's where companies file their reports. It's all electronic. Does that go down too?
No, and that's a key distinction. EDGR keeps running. It's largely automated and run by contractors who are paid from different funding buckets that were already allocated.
So the system is online?
The system is online, but the people are not. Documents basically enter a black hole where no human reads them.
It's like a store where the lights are off, the clerks have all gone home, but the night deposit slot is still open.
That is a perfect analogy.
You can put money in, but nobody's going to acknowledge it or give you a receipt.
Exactly. And they do keep a small team for emergency enforcement. So if there's an imminent threat to property, like a massive active Ponzi scheme draining wallets in real time, they can intervene.
But routine investigations.
Paused. Routine oversight. Paused.
Which kind of sounds like a free-for-all for bad actors, doesn't it?
Yeah.
If the cop on the beat is on furlough, doesn't crime go up?
It certainly reduces the immediate threat of getting caught for smaller things, but the bigger long-term damage is legislative. We saw this in late 2025 with that record-breaking 43-day shutdown.
Right, the one that pushed everything back.
It totally delayed the digital asset market structure bill. That was the big bipartisan hope for clarity. It was supposed to finally define when a token is a security and when it's a commodity.
And it was gaining traction.
It was. Then the government shut down, momentum died, schedules got wiped, and we're back to square one. Now, with another shutdown here in January 2026, we're looking at the potential for 2026 to become a lost year for federal crypto reform.
A lost year. In an industry that moves this fast, losing a year is like losing a decade in traditional finance.
It is. Innovation doesn't wait for Congress. But before we get to the global picture, we have to talk about something that hits your wallet directly. Because it's January,
Oh, no. Don't say
the
it.
tax season.
The most wonderful time of the year. Okay, so if the government shuts down, does that mean I don't have to file my taxes? Please say yes.
I wish I could tell you that, but no. And this is the tax trap we identified in that Takedia report.
Explain the trap. Because if the IRS is shut down, who is even going to process my return?
So the IRS gets hit incredibly hard by these shutdowns. Historically, they furlough somewhere between 46 and 74% of their staff.
That is massive.
It is. And the people who go home are largely customer service, the people who answer the phones, the people who process paper returns.
If I have a question, I'm basically just talking to a wall.
If you have a complex crypto tax question, say, about how to handle a wash sale rule across 3 exchanges, or report a loss from a defunct platform, and you call the IRS helpline,
Dial tone.
you're going to hear a dial tone or a recording telling you to go away. But the automated systems still work.
Of course they do.
The computers that accept your e-filing and, more importantly, the computers that accept your payments, those work just fine.
They can take your money, they just can't help you figure out how much you owe.
Exactly. And for crypto users, this is a nightmare. Taxes are already complicated enough with staking rewards, airdrops, DeFi transactions. If you made a mistake and you need to talk to an agent to resolve it, you're just out of luck.
And the deadline.
The deadline is the deadline. It does not move just because the government is closed. You are legally required to file on time. If you delay because you're waiting for help, you will get hit with penalties.
It's a rock and a hard place. But let's look at the flip side. If, say, 74% of them are gone, does that mean I'm safe from an audit? I mean, surely they can't audit me if they aren't even there.
During the shutdown,
Yeah.
maybe. They do generally pause non-automated audits. But here is the catch, and this is what people need to be really careful about. The audit backlog just grows. It's like a dam holding back water.
And when the dam breaks,
When the government reopens, the IRS is under immense pressure to catch up and generate revenue. They often come back more aggressive. The Takedia report specifically mentions the IRS has been investing heavily in blockchain analytics tools like Chainalysis.
right, they can see everything on chain.
They can. And those tools are automated. They don't sleep just because the agent is on furlough. The software is still crawling the blockchain, flagging high-volume trading, flagging DeFi interactions.
So just because the auditor isn't at their desk this week doesn't mean their software isn't flagging your wallet for a review the second they get back.
Do not mistake a pause for a pass.
That's solid advice. Do not mistake a pause for a pass. So, okay, we have the SEC in zombie mode, preventing new growth. We have the IRS in a coma, but a dangerous one where the machines are still watching us. What is the rest of the world doing? Are they just waiting for the U.S. to figure its life out?
Not at all. And this is the real danger of American paralysis. While we're gridlocked over DHS funding, jurisdictions like Hong Kong and the UK are moving forward.
We saw that in the U.com report, right? They're advancing their licensing regimes.
Correct. The UK is moving ahead with stablecoin consultations. They are actively building a framework to make stablecoins a regulated, accepted part of their banking system. Hong Kong is refining its exchange licensing to attract institutional money.
They're creating clarity.
And capital hates uncertainty, but it loves clarity. So put yourself in the shoes of a crypto founder or a VC. If you're looking at the landscape right now and you see the U.S. entering its second major shutdown in 6 months versus the UK rolling out a clear rule book, where are you going to set up shop?
You're going to London or Hong Kong or Dubai.
The risk is capital and talent migration. We risk handing the keys to the future of finance to other countries simply because we can't keep our own government open. We're basically telling innovators, don't build here, it's too messy.
There's another layer to this, too, involving the Federal Reserve. How does the shutdown affect the Fed? Because they aren't funded by Congress in the same way, right? They stay open.
True, the Fed stays open. Jerome Powell still goes to work. But he has a big problem. The Fed relies on data to make decisions about interest rates. Specifically, reports from the Bureau of Labor Statistics jobs reports, inflation data like the CPI.
And the Bureau of Labor Statistics is government funded.
Which means if the government shuts down, the data stops. The researchers go home. The report doesn't come out.
So the Fed is flying blind.
They're flying into a storm with no radar. Think about the economy right now. It's fragile. The Fed has to decide whether to cut rates to stimulate growth or hold them to fight inflation. But without the jobs report, they don't know if the economy is heating up or cooling down.
And the markets hate that even more than the shutdown itself.
Yes. If the Fed makes a policy mistake because they didn't have the data say they keep rates too high for too long, that could trigger a broader recession. And as we've seen, crypto is trading like a high-risk asset right now. A Fed policy error could send Bitcoin tumbling even further.
It really is a domino effect. It starts with a political argument in the Senate about immigration, leads to a shutdown, which blinds the Fed, which scares investors, which crashes the market.
That is the mechanics of paralysis. It is a cascade of failure where one broken gear just jams the next one.
So bringing it all back home, if I'm listening to this and I'm holding a bag of altcoins that are down 15% this week, what's the big takeaway? Is this just noise, or does this change the thesis?
The takeaway is that the ecosystem is more fragile than we like to admit, short term. Prices are down due to uncertainty and leverage flushes, medium term. The regulatory pathway for things like new ETFs is blocked for the foreseeable future. The IRS is a mess, so get your taxes right on your own because no help is coming.
And long term.
Long term, the U.S. is losing its competitive edge every single day this continues.
It's a sobering reality check. We talk about crypto being uncorrelated or independent, but this week proves we are very much tethered to the reality of DC politics.
It raises a really important philosophical question, doesn't it?
What's that?
Well, think about the core promise of crypto. Why was Bitcoin created in 2009? It was built to be decentralized, permissionless. It was supposed to be money that exists independently of any state.
Right. Vires in numerous. Strength in numbers. Code is law. The whole point was that we didn't need the banks or the government to operate.
Exactly. And yet, look at us. The moment the U.S. government threatens to stop working, to actually do less, to shut down, the crypto market crashes.
That is deeply ironic, isn't it? We claim we want to replace the traditional financial system, but when the traditional system takes a sick day, we catch a cold.
It suggests we aren't nearly as decentralized as we think we are. We are deeply dependent on the stability of the very state institutions we claim to disrupt. Are we truly building a parallel system, or are we just a high-beta derivative of the old one?
Man, that is a heavy thought to leave us with. Are we just a high-beta derivative of the old system? I'm going to be thinking about that one all week.
It's something every crypto investor needs to ask themselves during times like this.
Well, on that cheerful note, we're going to wrap it up. Fingers crossed for a resolution in D.C. But until then, stay safe out there. Watch your leverage. Seriously, watch your leverage and double-check your tax returns. Thanks for diving in with us.
Stay informed, everyone.